Good afternoon, ladies and gentlemen. Time to wrap this up. This is the E-mini F1 screen, lower high, lower low. On this screen, we're still sellers. First, to retest the low to see if we can take it out. Now, we've got pretty good buying below 63. And we've got really, really good selling above 82. And that's pretty close to a 20 handle range, which is where we are. We are still building a P here. If we were to put all of this together, we'd still look at volume greater than the volume in this particular piece. So verdict is still out. Fundamentally, I don't see that there's any news out there that can break us out to the upside. Fundamentally, I can see there's a lot of news that could take us out the bottom, but that certainly has not happened yet. Taking a look at the F2 screen. We've got a profile or structure that's leaning B, but it's not a super strong profile. If you look strictly at the TPOs, you can make a case for a B. But volume is in the bottom half of the distribution. That tends to favor lower prices. So based on this, I can certainly sell failure to take out this 73, 75 area. And then our second sell would be at 79.81. On the buy side, I still think we're in our 63 area that we had this morning as support, so we'll leave that as buy 1. No news on Monday to drive the trading, and then 55, 57 for buy 2. Today we came in wanting to sell 69s to 70s, and the first move was down. The market hit 62.50. We had a buy at 60 to 62. We had support at 60 to 63. Had a couple of opportunities to buy the 63, 64 area, and the market did trade up to our second sell zone, which was 74, 76. So we caught both ends of the market as a great day trading, and you can't be much more pleased than that. That's just a good day, good solid day of trading where all the ideas worked out pretty much as expected. So I think we're still in a trading range, and I would call it a trading range with a lower bias. Based on the fundamentals, we got put a couple of articles up after my return from lunch. And they both suggested that Friday's reports and this week's reports weren't as strong as suggested, the headline suggested. And again, we really are put in a position of having to read these economic reports in depth to try to figure out how bullish or how bearish they might be. Okay, on the note, today we came in wanting to sell failure basically to get through 125.04 to 08. The high was 125.06. We had a buy at 29 to 125.01, and the low was 29. So we caught both ends of the market very well. Had multiple opportunities to get short and long for that matter. Today is a post-auction day that usually yields a trading range market. Yesterday afternoon, we said the market would close at 124.28 or higher. The official day session close I apologize for that. My wife doesn't know how to keep the dog quiet. Everything happens when I turn on the mic. Murphy's Laws, right? So Henry is now in the penalty box for the duration of this recording. So we got a higher high and a higher low, but it's post-auction week. My guess is we sell come Monday. A lot of it will be dependent on what the E-mini does. So we got a B pattern. Like I said this morning, we wanted to sell 4 to 8. We did close today at 25, so the trade will be selling failure at 125 to 125.04. We came in this morning wanting to buy 29s to 01s. I think because it's a B pattern and the tendency after a post-auction week is for the market to sell, we're going to lower our buy to 25.21 for the day session. And overnight session 2 starting in Globex, but it may take 29s to get in. Just really hard to say. So much is dependent upon what happens in the E-mini. But the sell and failure at 125, 125.04 is pretty easy to see. And I am going to lower the buy zone because I do think that the tendency post an auction is for the market to sell. Looking quickly at the bond, the knob spread came in quite a bit today. The rally to 11.22, Jimmy told me, started at 10.21. We are above that, but it's within reach. And then obviously 10.16, 10.20 will probably be the first band of support on the knob, and that would mean extra selling in the 30-year to get down there, so we'll be even more cautious on the 30-year and where we place our buys. A little more aggressive on the sell side. Okay, last rotate up stopped at 27, so we're going to sell failure to take out 28, 136. And then second sell will be 4 to 8. On the buy side, I think we can go a little lower, so we're going to make it 13 to 17. But we may have to pay 21s. Again, it just depends on what the E-mini is going to do. And then 5 to 9 down beneath. The inverse relationship has returned. We did have yesterday, both of them did trade lockstep with each other, but that's pretty unusual these days. Gold was pretty quiet. It is pointed lower. I talked to a couple of buddies. They think that the eastern Ukraine is going to vote for independence. They have a better shot at pulling that off than the rest of the Ukraine does because all the manufacturing in the Ukraine is in the eastern half. They have a higher per capita earning than the western part does. The western part is primarily food. The eastern part is primarily manufacturing. So they got a better chance of making a go of it than the western part does. We didn't take out 85 once again, so maybe stops below 85, 83. When London trades Sunday night, the referendum's supposed to go through. If it's peaceful and there is no fighting or they don't vote to secede, then I would think gold could trade off. If there's fighting, if they vote to secede, then gold could trade up because of the increased potential for conflict between Russia and the Ukraine. Again, Russia's holding all the chips. Ukraine cannot take on Russia. But Russia does not want to get out and take on a guerrilla war either. So it's not super clear as to how they will play it. As I've said for the last couple of weeks, I think Russia got most of what they wanted already, and the rest of it, if it falls in their laps, they'll take it. But they're not going to press the issue. Yeah, I think, Jimmy, if the last time it took off from that 20 area, maybe stops below 20 is what the play is. They stopped at a point off that last rally, so one full point higher. So I wouldn't put it past the trading community. That's the way that they think. Keep the math easy, right? Go for stops that are within reach. That's their job. Okay, we have a, from a distribution standpoint up here, we have a market that did come to balance. We do have a tail up above. We said this morning that we'd like the short side better. We thought it could break, but we'd have to get to 150 first. So 150 held early in the session. The market did rally in D, and you can see that we're rejecting prices above 90. That set up the break that came in G period lower, and we've rejected prices below 100. So we were hoping to buy against 100 today. That's where we find ourselves right now. So we have rejected prices below 100, so let's make 99.75, 99.50 buy one. And then 99 even, 99 and a quarter buy two. And on the sell side, we're going to make, it's pretty aggressive. We're going to make 25 to 50 sell one, and then 75 to the buck for sell two. And we have a news event, the Eastern Ukraine vote. So keep that in mind as you engage the crude oil market over the weekend. That should be settled by the time we come in Monday morning. And last but not least, the euro. The euro had 2 days of follow-through selling. Got hit pretty hard again. This is the intent of Draghi, the central bank. They got to be happy. The people that write on the continent of Europe said he drew a line in the sand. Now he's got to follow through with further easing come June. He doesn't have to do that, but it would probably help his market clout if he did do that. So our second buy zone today was 40 to 50. We just touched it, so why don't we let them get stops below the overnight session low. So we'll make 30 to 40 buy one, and then 37 even to 37.15 for buy two. And on the sell side, last rotate up was 67, so 65, 75, sell one. And then 90 to the buck for sell two.